Look, the further I go, the more I like Wise. Hey everyone, it's Andrew here. What I'm looking for is a big winner, something that can return like 50x or 100x. And I get my ideas from anywhere really. I'm such an idiot. See, I use Transferwise like 20 times a month, and I think it is great. But not once did I stop to investigate the company. So obvious, right? Anyway, so I was just starting my research on Wise, which used to be called Transferwise. And I thought I would make this video at the same time. So I apologize if this video might go through some ups and downs over the next days while I'm putting this together, and maybe it is a bit incoherent. Anyway, I haven't looked at the finances yet either, and I haven't really dug into the company at serious detail. So anyway, this isn't going to be a polished video, rather a progressive video where I go through my research as it's unfolding. It's a bit more real and hopefully a little more entertaining as well, because I also don't know what is around the corner and what I'll discover. All right, so let's get started. And well, the first thing I normally do here is I just go and have a look at the company in TIKR, and I look at the stock chart and I get a feel for what Wise even is. But I already know what the company is, but for you, let me explain. Transferwise is like a fintech company that helps you move money from country to country. So if I wanted to pay somebody in, I don't know, Hungary or Japan or wherever in the world, and I have, I don't know, euro, and I'm trying to move it into Japanese yen, well, I would use Transferwise, and the idea is that if I went through my bank, they would charge me like, I don't know, 35 euro or something to do the transaction, and then they'd hit me with pretty bad exchange rate on the exchange rate spread as well. They'd give me a pretty bad rate. So, if I looked at the Google rate and what the rate that I actually get, it might be, I don't know, a euro or two off. So I'm getting hurt on the spread, and I'm getting hurt on with the high 35 euro fee as well. So with Transferwise, it's like 10 times better. Like I can get, not only do I get very, very close to that Google rate, I think I nearly get the Google rate, and which is the midpoint of the rate between the buy and between the bid and the ask. And the fees are, well, depends on the country and depends on the setup they have, but they're very affordable. Normally I'm paying under a couple of dollars. Sometimes I'm paying like less than $1 to make international transactions. So Transferwise is a vastly superior service than what the banks provide and what Western Union provides and stuff like that. Okay, now with this one, as you can see, it's on the London Stock Exchange, and you're going to need a broker like Interactive Brokers that gives you access to international stocks. It's the broker that I use and highly recommend. There's a link in the description. I have demo videos here on my channel if you're just getting started and want to start investing and using a good broker. That's what Interactive Brokers is. Now, because I'm a customer of Wise and I use them all the time, I do have a pretty big head start here, and I do really like the products. So I have a big advantage over most people. Anyway, the next thing I did was I went and checked the Net Promoter Score, which is actually about 75. See, a Net Promoter Score is a score from -100 to 100. And the test is really simple for people all over the internet. It's kind of like a review metric. Anyway, above 0 is considered good, above 50 is considered excellent, anything in the negatives isn't good. And I really like this metric. It's a great way to check if I'm onto something or not to bother. A bad Net Promoter Score, as long as it has lots of votes, is probably a sign that it won't be successful because people just don't like it. And I think about it just really simply. I mean, the things that you really like are probably successful companies. So if a lot of people really like the business or the products, well, it's a good indication that the business is going places. I know I'm going off on a bit of a tangent here, but here are some examples of companies where it is obvious that customers just like the business. So we have Apple with people lining up for the new iPhone. Nintendo, there's like 4-hour queues to get into their new Tokyo Nintendo stores. TikTok, people spend 52 minutes per day on average per user, and it's the most downloaded app in 2021. And then I look at those Net Promoter Scores for some of the other big companies, and we've got Netflix at 68, Starbucks at 77, Amazon 62, Airbnb 72, Tesla's 91, Costco 74. So I look at that list and I think, well, what do all these businesses have in common? Well, the customer comes first. Profit can come later, and they just focus on delighting the customer. They have word of mouth advertising. So these companies get free promotion just from their customers, decreasing long-term advertising costs significantly. There's consistency here as well. Like getting a bad coffee at Starbucks isn't going to happen very often. A bad delivery from Amazon is not going to happen too often. These things are treated also very seriously by the company. And what all of these lead to is customer retention. And this is a huge competitive advantage. You could probably just look at a net promoter score to get a list of companies to invest in, work out their valuation, and just buy them when they are in your valuation range. Okay, maybe that's too simple, but anyway, how much people actually like something is a really good indicator of the business doing a lot of things right. Now with Wise, their most recent net promoter score is actually 84, but we do have to be careful it isn't going to be some sort of fad and something better will come along. Popularity, I guess, is fickle, so now I want to check for staying power. Is there something that will give the business a long-term sustainable competitive advantage? And this, I guess, is the super tough question of investing. It's the art of investing, and it's your analytical advantage if you can figure it out. I don't know of a perfect way to do this yet, but I think experience is helping, and I think looking at what the best investors in the world think, that also helps. So the next thing I went and did was I checked what super investors are invested in the company. So I'm inside TIKR Terminal, and to find what super investors have already invested in this company, I go over to the ownership tab over here. So I click on that. And all I'm simply doing here is I'm just taking a look down at the list of people or companies that have invested and just seeing if I can pick up any that I'm familiar with. So Andreessen Horowitz is a VC, a big name in the VC world in Silicon Valley. That's interesting because they've got the fourth biggest stake in the company. I know Christo Carmen, he's the CEO. He has 20% of the company. And I think Enriquez Tarvet, I think he is also one of the co-founders as well, and he's at nearly 10%. So insider ownership, we've got I don't know about a super investor, but definitely somebody who sees a lot of companies. To have a big stake in Wise is really interesting. And then I have a little look down further here and I see Lone Pine Capital. Now that's Stephen Mandel. He's a fantastic investor and I would consider him a super investor. Has 3% of the company. So I can definitely give this a tick, and there's some pretty smart people who have invested in this one, and yeah, that reassures me a little more. Next up, I'm actually going to have a quick look at just the really basic financials to see if the business is growing and get a very quick feel for valuation. So I'll take a look at the revenues, and it has grown from, well, only a few $1 million, like $9 million to now $500 million. So as you can see by the change year on year here, the growth has been like exceptional. So it is slowing down but it's off a low base from these 100, 200, 400% numbers. That was off a low base, but more recently it looks like they grow at 39% and looks like around about 25, 30%. So they're growing at pretty good speeds here, but it is slowing down, which is fine because they're getting bigger, and it'd be interesting to see what that might look like over the next 5 years. Anyway, then I look at the gross profit margins. The gross profit margins here, and we're looking at, it was in the 50s, now it's in the 60s. That's fine, that's stable. Give this all a tick so far. The next thing I look at is this selling, general, and administrative expenses. And what I want to find out is how much of this number here is actually going towards like advertising for growth or just general admin expenses, because there's a big difference between the two. If they're pouring money into acquiring more customers, well, that's essentially a growth capital expenditure, and I can probably take that out when I'm doing my valuation, because I want to get a feel for what the company is worth today, not what they're putting money into investing into the future. So I want to find out as best as possible how much growth is in this number. Then I go over to the cash flow statement, and the numbers are really big here. It's like 2.3 billion or something like that. Now, the reason this is not going to be a very good metric for this particular company is because they're moving money, other people's money. So it looks like they've actually got a lot of cash moving through this business, but that cash isn't theirs. So cash from operations isn't going to be a very good number because of the business that it is. So we're going to have to look at a better way to calculate free cash flow. Now I'm in the balance sheet and I'm having a quick look at the debt. So the current assets is going to be a bit of a mess because they're moving so much money. That's going to be a huge number. It is 5.5 billion. The current liabilities is going to be big as well, 5.1 billion. Anyway, what I'm really going to do here to work this debt out is I'm going to look at this net debt number here. And the total debt number is just above it. Looks like they've got about $100 million in total debt. The net debt number, that's a bit of a mess because it's got all that cash balance. So total debt, there it is there. Whether that's okay or not, I'll have to go through the financial report and see what interest rate they're paying on that debt and things like that. So there's a bit of work to do here. I'll put another question mark. Now, regarding insiders, we saw earlier that the CEO has about an 18% stake in the company. That's perfect. The other co-founder has about 10%, which is great too. Look, founder-led CEOs are often the best, and I really like that. Now, regarding shares outstanding, it looks like shares could easily be diluted in the future because it's a young company. And look, I'll just have to read the employee incentive plans as well. For now, I'm probably going to expect some sort of dilution. It looks like, based on I've gone away and had a quick look at the annual report. It looks like they're diluting at about 3% per year, but maybe that changes dramatically moving forward. Not sure there. That's a big question mark. Now what I do is I just want some really basic valuations just to see if I should dig even further or if I'm wasting my time. And a quick way to do that is just to look at the valuation tab here in TIKR Terminal, and I'm just going to have a look at the more the recent dates. Okay, so we're looking at these forward multiples and trailing multiples here. So I'm having a look at the market cap to free cash flow, and it's at 61 times. That's extremely high and looks very expensive at first glance. The PE ratio, which is just here, price to normalized earnings, is at 60. This company at first glance looks actually really expensive. So that's not a good sign. Maybe I'm wasting my time here. I'm going to go further, but look, it feels like this is expensive. Now, it only feels like it's expensive because of those metrics, but I haven't factored in any of the growth yet. So I'm going to have to do some digging to see if I can uncover something that's maybe hidden. Maybe I can see that the growth rates are going to be really strong for quite a long period of time, and that would actually justify a high PE or a high price to free cash flow. So it's not the end of the analysis yet. Okay, so I've gone and read through the annual report now, and I found that they said the free cash flow has increased 39% over the prior year to £59 million. And that's up from £42 million the prior year. So it's definitely clear that the free cash flow is growing, so we can give that a tick. Okay, so here's a direct quote from the annual report. They said, as at the 30th of September 2021, we held $5.4 billion of cash and highly liquid investment grade assets, up 32% from the end of financial year 21. Now, the majority of these assets are used to cover the $4.9 billion of Wise account customer deposits, which we keep safeguarded and readily available. We also hold, here's the key point, £344 million of Wise's own cash, which is increasing thanks to the cash generating qualities of the business we've built. So I've got $344 million and took out that long-term debt number, and I put it here in the calculator. Now, the growth rates I've used were around the low end of guidance from the management team. This could vary all over the place, but I think it's in the ballpark. And looking at the revenue growth of the past, I think it's very possible. But it is declining, so maybe I need to adjust it down even lower. I thought I'm down to 25%, I think is about okay, but maybe it could be down at 20%. Now, when I look at the stock price at the moment, it's about 500 pence. Now, remember, don't forget that London quotes in pence, not pounds. So this is actually £5. So I need a good maybe 35% drop from here. But as you've seen in the markets recently, that is totally possible. All right, so now I'm going to dig into the competitive advantage and see whether this company should go on the watch list. Now, a lot of this is my opinion, but here is what I like. So after learning the scaled economy shared business model courtesy of Nick Sleep, and following that mental model through Costco, Amazon, and ASOS, I do believe that Wise is another scaled economy shared business. And I think it is a scaled economy shared business because, well, one, they literally spell it out in their mission statement. Their mission statement is, well, building money without borders, instant, convenient, transparent, and eventually free. They're trying to get this to be free. So they're driving the costs down for customers. The next thing I like is they're 8 times, maybe 10 times cheaper than the average bank. I also like the CEO, Christo Carmen, and he said this: we've become a stronger business as we continue to generate healthy gross margins whilst reducing prices for our customers and investing in our long-term growth. It's exactly what I want a CEO to be doing. He also said, well, while growing volume by 44%, we also engineered and optimized away marginal costs and passed back the savings to customers. That's what a scaled economy shared business is. They're passing the savings on. And he goes on to say, and as a result of all this, the take rate has reduced by 6 basis points to 0.75%, but revenue grew 33% to £256 million. Okay, just to drive this point home, this was the first highlight of the presentation. They said, we've made progress on our mission. We managed to reduce the average price our customers pay for moving money across borders to 0.62% in Q2 financial year 2022. And that's down 7 basis points compared to the average price in Q4 financial year 2021. So it's all about saving the customer money, eventually getting it for free. And if it does get to be free, they will still be okay, because with all that money moving and sitting in Transferwise accounts, they're going to be able to earn some interest, and they're also going to be able to provide all these additional services. Look, the more I read, the more I understand how this is a scaled economy shared business. The better and more efficient they become, Wise just passes this on to the customer. Analysts just don't like this because it hurts their profitability. But I think I love it, as it's clear to me that they're building a really strong competitive advantage. If I go and have a look at what competition are doing, well, Western Union, it's terrible. They just have physical locations everywhere. But I just hate Western Union, and they murder you on fees. It's a terrible experience. I avoid Western Union as much as possible. It's this old legacy business, and I think they're seriously in trouble. Then I think about the regular banks. There's like 3 to 7 days processing. Ugh. Fees are also terrible. My bank charged me like €35 for an international transfer. That's disgusting. And you might think of the startup banks like N26 and Revolut. Well, these guys are pretty good, but they don't work like Transferwise. It's okay for those who have access to it, but it's quite exclusive still. More of a bank than a transfer service, so maybe it's not quite a good comparison. But what I have found is that I know N26 and I think it's called Monzo, something like that. It's a European bank. It's quite a new bank, but I know they're using the Transferwise, the Wise API to do their international transfers. So Transferwise are actually getting a little cut of the transfers anyway from these fintech businesses of Europe, fintech banks of Europe anyway. Then we have other services like xe.com, and they seem pretty good with even more countries than Transferwise, but they hide the exchange rate fees. And this reminds me of Robinhood for hiding how they make money. They entice you in with these no fees, but get you on the exchange rate spread. I like Wise for being super transparent, and I know exactly the fees before I make a transfer. And Wise is generally faster, with now 30% of transfers happening within a few seconds. xe.com is still pretty good compared to the banks though. It's not a bad number too, but Wise is better, and I think will be stickier than xe.com. Look, the further I go, the more I like Wise. The customer experience is just far better than anything else out there. Now, the next thing I wanted to look for was how big the opportunity could be here. And well, I think the opportunity is massive. See, cross-border payments is about a £22 trillion volume and is growing at 5% per annum. Now, Transferwise currently have about 2.5% market share, and that's according to their website. So, well, what is possible? Well, I don't know. Maybe they can get half of this market and roll out throughout the world, and plus continue eating market share away from others because they are the best and the lowest cost. So it feels like it is more when and then if they crush Western Union, and Western Union is a lot bigger at the moment. And then I think a little bit further out into the future, and I think, well, what about maybe cryptocurrency? Well, I guess this is a bit of a dark horse in the international payment space, and I don't know what is going to happen there, so that's a big question mark, but it's pretty hard to predict. I don't think that's happening anytime soon. Then I think, well, maybe some competitors might be able to catch up. Well, it's possible, but it is why I like the business model so much. See, Wise is driving the cost for the customer lower and lower. And with a really simple, good service, customers are getting loyalty and trusted. And that's growing, and customers are coming back just like me. So I am a big fan of Wise, and I would be proud to be a part owner of this company. I won't be buying right now, but I hope to get the price I want. It is just too expensive for me. I also need to do some more digging and see if I can understand any hidden value that might get me over the line to pay up a bit more for it. But there's so many reasons why this should definitely go on my watch list, as I think this is probably a good long-term compounder. If you want to see my watch list and keep up to date with a lot of the companies I'm tracking, sign up to Undervalued, which is my e-magazine that I release on the first Wednesday of the month. It's $10. Take a look at an old edition through the link in the description if you want. Now, a quick shout out to Joel Turner. He's a mate of mine from my university days. I'm looking forward to seeing you in Amsterdam sometime soon. Thanks for watching my videos. I appreciate your support. You are a legend. Thanks for everyone else for staying to the end, and I will see you next time.